All right, in this video, we're going to be looking at order types. So different types of orders you can place on the market. So this is how you will get into your trades. Okay. So let's go to the next slide. So we have market orders. Now you'll see this on your trading platform when you use MT4 or MT5. You will see that when you go to place an order, you can decide what type of order you want to place. And one of them is market orders. And the options you got with market orders is just a buy or sell. Okay, so what this means is as soon as you click on buy or click on sell, you're in the market at that price. Okay, you go in there straight away. The trade execute straight away and you are in the trade. So it's as simple as that. So you're executing a market order. So if someone says you need to enter the trade at market order, you just get straight in there. Don't wait till price to reach a certain area. So having said that, the other order types we have what's called a pending orders. Okay, it is what it is. It is what it says. It's a pending order. So we name them buy limit, sell limit, buy stop, or a sell stop. Okay, so what I'm going to do, I'm going to break down each one of these now just to try and explain to you what they are, because I remember when I first started trading, and a lot of other people as well, they get confused about what is a buy limit and what's a buy stop. What's the difference between those two, and then trying to remember those differences when it comes to when you're actually trading. Okay, so let's go into the slide right here. So we're going to start here on the top left here. We've got a buy stop, and then we'll have a look at the sell stop as well, because that's just a complete opposite to the buy. So what a buy stop is, you are on a chart, you are looking to get into a trade, but you don't want to get into a trade until a price reaches a certain area and then continues going in that direction. So we're looking at the buy. So if price is right about here, and then you anticipate the price is going to go up to about here, okay? But you don't think trade is going to come back down first and then go straight up. You think this trade is going to go from point A straight to point B. So what you can do, if you're not sure if a trade is actually going to do that, you can set a buy stop so that when a trade does decide to shoot up, okay, you can place yourself in the trade. So that is a buy stop. So you can anticipate that the move is going to move upwards, and you can say if a price gets to this level and I want to get in that trade. So if price gets to that level, it triggers the trade and continues going in that direction. So that is a buy stop. The same with a sell stop. If you think price is going to drop, okay, but you're not quite sure, so what you do, you'll set a sell stop and you'll say if price comes down to this level, it's going to continue to fall. So what you'll do is put a sell stop there and you watch price. Price comes down to that sell stop, activates the sell, and then keeps going down. So that's only if you anticipate the price is going to keep going in that direction. I don't personally use buy stops or sell stops in my strategy, but a lot of people do use them in their strategies. So the ones I focus on are the buy and sell limits. These are the ones that I use. So what this means is, let's use the buy limit example. So I anticipate that price is going to go up at some point. Okay, so my bias for the day is go long or you're bullish, and I just want to get in the market in a buy position. But I think price is going to come down to a certain level first and then go up. Okay, so that's what I want to see happen in the market. And this is what my strategy is based on. I want price to come down, then go up. So that's when you put in a buy limit. So the price is up here. I put my buy limit down here. So I anticipate the price is then going to come down, tap me in, and then go up. So that is a buy limit. And the same with a sell limit. You anticipate the price is going to go up first and then come down. So you want to get in your trade when the price goes up. The price goes up, activates your trade, then comes down. That's when you put a sell limit. So I'm going to jump on it on this on the chart now, and I'll try and explain it a little bit better in a different way so you can visually see how that looks. Right, okay, so I'm going to give you a buy stop and a sell stop example. We're going to start with a buy stop first. So let's just imagine this is the candles on the charts. Let's come up and down. Right, okay, so price moves up and down all the time, okay? But at the moment, price is kind of like moving sideways. It's not really going up in an uptrend, not really going in a downtrend. But your analysis previous to this suggests that price may continue to go up, okay? So at this point, what you're waiting is for is maybe for price to break through this. So once it hits, goes above this highs, okay, the chances of price to continue to go up is quite high. And the same with a sell, it's possible that the price could just break down here and continue going down. But at the moment, my analysis says the price is going to go up. So what you could do in this situation is that you will set a buy stop, let's say just above the highs just there. So what this means is that you are now waiting for price to come from here, go up past here. Now you're in the trade, okay? Because you're saying if price comes above these areas here, the price is likely to keep on going. So you're going to put your buy order right there, or your buy stop, sorry, right there. And then you're in the trade, and it just keeps going up, 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 and comes down a little bit, continues to go up, okay? And this is what it looks like. I just put that green line in to make it a little bit helpful. So you anticipate price is going to go up, but you didn't want to get into the trade until price comes up here. Okay, so once price then passes this line, you are now in the trade. Okay, so the price just keeps going up and we hit TP. All right, but if price goes up here, taps into this area, activates your trade, and then comes back down and breaks below this area, all these lows down here, the chances are the price is going to continue to go down. So we want to get out of the trade before we lose too much money, which is why we put our stop limit, our stop loss, sorry, down here at the bottom. Okay. So that way, when we're not going to lose too much money, we know how much we're going to lose. So we put that there. So it works in the opposite direction as well. So that was a buy example. Now it could also work with a sell. So your analysis says that for the day, price is probably going to keep going down. But the price is just going up and down. It's undecided which direction it's going to go in. But your bias is that price is going to go down. But you don't want to get into a sell position until price confirms that it's going to keep going down. So what price could do, it could come back up here. It could come back down and then activate your trade. So let me go back. Do you anticipate price is going to go down? So what you do, you put your stop loss just above the highs there, just in case your analysis is wrong. And then we set our take profit there as well. So you anticipate price is going to go down. When price does this, it comes around. Just because it's in this red area doesn't mean it's in a trade. It only activates a trade once it crosses that green line there. So it comes up here, comes down here. Now your trade is active. Okay, so price could come down here, and now you're in profit, and then it could come back up, and then it could come back down, and then back up, and back down, and so on, like that. So you are now in profit, and you would have hit your take profit right there. Okay, but again, if your analysis is wrong, it's okay. You got your stop loss there, and you're only going to lose what you said you wanted to lose. So if you go back to a previous video about risk management, I will only lose $1,000 there if I do like a one-to-one risk reward ratio on $100,000 prop firm account, and I'll be risking 1,000 to make 2,000 right there. Okay, so that is a buy stop and a sell stop. Now let's move on to the buy limit, and sell limit is the one that I use most frequently, and I think most other traders use them as well. Right then, so we've got price. Now, it looks slightly different to last time. There we go. So price kind of looks like this. And what you're seeing is an uptrend, yes, but I anticipate now that price is going to go down. My analysis says the price is going to go down. And I don't want to get into sell position until price reaches this area here. Okay. So I think price is not going to go any higher than this area. I think price is going to come up here, tap into this area, and then go down. Okay, so I'll put my sell tool right there. I'll put my stop loss just above there and move that down here. So if I'm putting a sell limit in, this is what I anticipate price to do. I anticipate price to come up, tap into here, go into the red area. Okay, remember it's fine to go into the red area. We give ourselves a bit of breathing room. And then I expect price to come down. Okay, so that is a sell limit. So I'm putting a limit order up here. So I anticipated the price will be coming down, but I thought price might go up first. So price it came back up, come up to the area I thought it might change direction, and then come back down and keep going down. Okay, and it'll work exactly the same in the opposite direction as well. So we'll just do a buy limit. No. So price going up and down, up and down. And we got that. So I see price doing this, and then I anticipate now that price will come down, will come all the way down to this area here, and then go into the opposite direction, into a buy. So you put that there, put my buy tool here, put my stop loss down here, my take profit up there, and then I anticipate the price will come back up, tap into this zone. It might even do this. It might tap into the zone, come down here, back into the zone, back out, and then shoot off. Okay, so that would be a buy limit right there. So I hope that makes sense. That is part of my strategy. I will go into why, as you can see, it goes in a downtrend here, why I think a price will just suddenly start going in the other direction. This is what trading's all about. It's catching the moment that price reverses. That's what my strategy is all about. So I'll be teaching you a lot more about that, a lot more in depth inside the membership area. Okay, so like I said before, it can be a little bit confusing learning the differences between a buy stop and a buy limit and a sell stop and a sell limit. But the more you start trading, the easier it is for you to understand. And if you follow my strategy, we are using the sell limit and buy limit pretty much all the time. I very rarely use market order. But I do that sometimes if I'm like almost like too late. I haven't got time to put in a sell limit or a buy order, but it's very rarely that happens. Okay, so I hope that makes sense. Like I said before, if you've got any questions, not sure about anything, just feel free to shoot me a message and I'll explain it a little bit better for you.